Hi there. Welcome to another video. In this video we talk about RSI indicator and tell you 3 best and popular strategy that you can use this indicator to enter a signal. So stay with us until the end of the video. The Relative Strength Index is one of the return technical analysis indicators used by traders to measure the strength of a pair's price action. RSI determines the return points and levels and shows the strength of buyers and sellers relative to each other over a specified time period, usually 14 periods. The RSI line is plotted as a line oscillating on a chart below the price chart and fluctuated between 0 and 100. If it rises above 70, generally considered overbought, and if it falls below 30, it suggests oversold. Traders use this information to make decisions about when to buy or sell a security. Before using these methods, keep in mind that the signals of this indicator alone are not valid enough to enter the transaction and should be used along with other analysis tools to confirm the technical analysis. Signals through overbought, oversold levels. Traders use the 70 line, overbought, and 30 line, oversold, levels as a potential to enter short and long, buy, sell, positions. When the RSI is above 70, it indicates that the pair is overbought, and when it falls below 30, it indicates that the pair is oversold. Signal through RSI trendline. One of the ways that traders get a signal from RSI is to use a trend line. They draw the trend line on the RSI, and if the main line breaks the trend line and pulls back to it, it is considered a trade entry signal. Signal through negative divergence, bearish divergence. Sometimes in the price chart, we see an upward trend in the way that we see a peak higher than the previous peak. But in the RSI, we see an opposite trend in the way that we see a peak lower than the previous peak. In this case, so to speak, we have encountered a negative divergence, which indicates the end of the upward trend. A very important point is that the second peak must be formed in the chart and then a few candles lower, and then we enter the sale transaction. Signal through positive divergence, bullish divergence. In the chart, we see a floor that is lower than the previous floor, but in the RSI we see a floor that is higher than the previous floor. In this case, we have encountered a positive divergence, which indicates the end of the downward trend. Pay attention to entering the purchase transaction when several candles are formed after the last floor. At the end, please notice that the RSI is just one technical tool traders use to analyze the market, and it should not rely upon just one indicator for making trading decisions.